Granoff Chapter 2. Nature of Funds. Government and not-for-profit entities establish their accounting systems on a fund basis. The term fund has a different meaning than it does in business accounting. Elements of financial statements for state and local government entities. This involves our coverage. Let's look at funds from a business perspective. For profit. There's one company. Financial statements are prepared for the company and its subsidiaries. Fund is used in an informal manner with multiple meanings: working capital, cash or investments available, or other definitions. The company is a single fiscal and accounting entity. Assets equal liabilities plus equity. Equity is called owner's equity. Now let's move to governmental funds. We have multiple entities, and this is in quotes, entities within the government. General government, electric, water utilities, libraries, parks, capital projects, housing, human services, etc. Fund is used as a formal term with a single meaning. This is critical. A fund is a fiscal and accounting entity with a self-balancing set of accounts. Each fund is like its own entity, again in quotes. In other words, a fund is an entity with its own set of books, chart of accounts, general journal, general ledger, trial balances, and financial statements. Let's look at the elements of government financial statements. There are 7 key elements, 5 relating to financial position and 2 relating to the resource of flows, the new GASB 63. Assets, liabilities, we're comfortable with those terms. The 2 new terms from GASB Statement 63, deferred outflow of resources, the consumption of net assets applicable to a future reporting period. Deferred inflow of resources, the acquisition of net assets applicable to a future reporting period. So we're tying together the deferred with future. Net position, this is the residual of all elements presented in a statement of financial position. Assets plus deferred outflows minus liabilities minus deferred inflows. Outflow of resources, that's the consumption of net assets applicable to the reporting year period. Inflow of resources, acquisition of net assets applicable to the reporting period. Now in this setting we're talking about the reporting period, current. Let's look at this in a different manner. GASB Statement 63 requires that governments, unlike businesses, must report deferred items in a separate category. Thus, a statement of position might be assets plus deferred outflow of resources minus liabilities minus deferred inflow of resources equals the net position. Let's look at funds for state and local governments. Based on GASB Statement number 63, fund accounting uses the equation assets plus deferred outflows equal liabilities plus deferred inflows plus fund balance. We've seen that before. In a slightly different form, assets plus deferred outflows minus liabilities minus deferred inflows equal fund balance. We've seen that before in this presentation. An important distinction: in financial statements that are prepared on a full accrual basis, proprietary, fiduciary, and the government-wide reporting, the residual amount is referred to as net position. In statements that are prepared on a modified accrual basis, the 5 governmental funds, this is referred to as fund balance. So as we work with accounting for state and local government entities, keep it separate. Full accrual basis, the residual is net position. Modified accrual basis, the residual is fund balance. Both fund balance and net position, like owner's equity, are residuals, the difference between assets and deferred outflows, and the claims against those assets, liabilities, and deferred inflows. We will work with this distinction as we cover the 5 governmental funds, modified accrual, 2 proprietary funds, full accrual, and 2 fiduciary funds, full accrual, as well as the government-wide GASB Statement 34 financial reporting, full accrual. We prepare financial statements for each of these types, and each has its own residual. Now let's look at not-for-profit entities. These entities use fund accounting internally to ensure control of funds, but do not report these funds externally. Not-for-profit entities. Net assets are classified into three groups: unrestricted, temporarily restricted, and permanently restricted. Thus, the equation is assets equal liabilities plus net assets divided by these three groups. FASB regulates not-for-profit reporting for non-governmental organizations and only requires 6 totals: total assets, total liabilities, total net assets, and within this are the 3 categories: unrestricted, temporarily restricted, permanently restricted net assets. And we cover this in detail in chapters 12, 13, and 14.